$105,000 a year. That's the maximum every retiree 70 and a half or older can send directly from their IRA to charity without paying a single dollar of federal tax on it. The money skips your taxable income entirely. It counts toward your required minimum distribution, and it's the only retirement move that lets you donate to charity using pre-tax dollars. Most retirees over 70 donate using their checking account. They give $5,000. The IRS lets them deduct it only if they itemize. After the standard deduction at age 65, most retirees don't itemize anymore. The donation gives them no tax benefit at all. The QCD changes that. Same $5,000 sent directly from the IRA to the same charity saves the same retiree $2,000 to $3,000 in tax. Plus, it reduces their AGI, which can save them another $1,500 in Medicare premiums 2 years later. In the next 10 minutes, I'll show you what a QCD actually is, the exact age and account rules, how it interacts with your RMD, the magic sentence to use with your IRA custodian, and the 4 critical errors that void the strategy entirely. There's a quiet moment that arrives around age 70. You realize you have to start taking required minimum distributions next year. Your RMD will push your AGI up. Your Medicare premiums might cross an RMD threshold. Your tax bracket might bump. You also write checks to your church or favorite charity every year out of habit. What nobody tells you. Those 2 events can cancel each other out. Today we fix that. 5 specific moves. Move 1. What a QCD actually is. Qualified Charitable Distribution. Section 8868 of the Internal Revenue Code. A direct transfer from your IRA custodian to a qualified 501c3 charity. The money never passes through your hands. It never hits your bank account. It never appears on your tax return as income. For 2025, the annual maximum per person is $105,000. Married couples can each do up to $105,000, so a couple can move $210,000 a year tax-free. Critical detail. The transfer must go directly from custodian to charity. If the check is made out to you and you forward it to the charity, the QCD treatment vanishes. The IRS calls that a distribution plus a donation. 2 separate events with their own tax rules. Move 2. The age and account rules. You must be 70 and a half years old at the time of the transfer. Not 70, 70 and a half. The IRS counts to the day. The account must be a traditional IRA, a SEP IRA, or a simple IRA. Roth IRAs technically qualify, but the strategy makes no sense because Roth distributions are already tax-free. Workplace 401k plans do not qualify. If your money is in a 401k, you have to roll it to a traditional IRA first. Take Margaret, 68 at the time of my last video. Margaret cannot do a QCD yet. She turns 70 and a half in 2026. From that day forward, every dollar she sends from her IRA to her church counts toward her RMD and skips her taxable income. Until then, her donations stay in her checking account. Move 3. How a QCD interacts with your RMD. Required minimum distributions start at age 73 under current law. For most retirees, that's $7,000 to $30,000 a year of forced taxable income. The interaction, a QCD counts toward your RMD obligation, dollar for dollar. So if your RMD this year is $20,000 and you do a $15,000 QCD, you only need to take $5,000 more as regular taxable income to satisfy the IRS. The result? A retiree who donates $15,000 a year via QCD only adds $5,000 to their AGI, instead of the full $20,000. That AGI difference compounds across every retirement year. Lower AGI means lower Medicare premiums, lower potential Social Security taxation, lower brackets across the board. Take Eileen, 67, widow in Ohio. Eileen is not yet RMD age. RMDs kick in at 73 for her, but she's already over 70 and a half. She does QCDs of $8,000 a year now to her local food bank. Once her RMDs start, those same QCDs will count against her RMD obligation. Net effect on her 73-year-old tax bill, $8,000 less AGI. Roughly $2,000 saved in tax, plus $300 saved on Medicare premiums 2 years later. Move 4. The magic sentence in the form. Every IRA custodian has a QCD request process. The biggest mistake retirees make is using the wrong wording. The magic sentence to use when you call your IRA custodian. Quote, I want to make a qualified charitable distribution under Section 8868. Please send a check directly from my IRA to the following 501c3 charity. The check must be made out to the charity, not to me. End quote. What they need. The charity's full legal name, the charity's address, the charity's tax ID number, also called the EIN, the amount, the form, custodian specific. Fidelity has its own. Vanguard has its own. Schwab has its own. They usually take 5 to 10 business days to process. The custodian will mail the check directly to the charity. The charity sends you a receipt confirming the donation. At tax time, the custodian sends you a 1999-R reporting the full distribution amount. You report it on your 1040 as a distribution, then deduct the QCD portion using a specific code. Your tax preparer should know exactly how to do this. If they ask, what code do I use for a QCD, find a different tax preparer. Move 5. The 4 critical errors that void the strategy. Error 1. The check goes to you instead of the charity. The QCD treatment dies the moment the check is made out in your name, even if you forward it to the charity within minutes. Error 2. The charity is not a qualified 501c3. Donor-advised funds, private foundations, and supporting organizations are not eligible for QCD treatment. The charity must be a regular public charity. Verify before you transfer. Error 3. The QCD is done from a 401k. 401k accounts cannot do QCDs. Period. Roll the money to a traditional IRA first, wait until the next tax year if your custodian requires it, then do the QCD. Error 4. The retiree is not yet 70 and a half on the transfer date. Even 1 day early voids the treatment. The full amount counts as a regular distribution. You've worked decades to save in your IRA. Once you cross 70 and a half, the QCD becomes the most tax-efficient way to give to charity in retirement. 5 moves. Know what a QCD actually is. Direct custodian to charity. Hit the age and account requirements. Use it to satisfy your RMD. Use the magic sentence with your custodian. Avoid the 4 critical errors. If even one of these saved you $1, hit subscribe. New videos every Tuesday and Friday. In the comments, tell me whether you've done a QCD yet or are planning one. I read every one. I'll see you in the next one.